Greetings, Dr. Jeffrey Scott. This is my Market MRI Pro update for Tuesday, December 2nd, 2025. I think we've now lapped the day where, or past the day, where the Fed has stopped the quantitative tightening. So that will increase liquidity in the markets, and maybe that'll give a stimulus to the stocks. I always question why they were cutting rates, but still tightening. But that's probably a big deal. We're also going into the period of blackout where there won't be any Fed heads because of the upcoming meeting in 1 week. On Tuesday, markets were mostly higher on choppy action as tech and mega caps led and healthcare pulled back. Again, my name is Jeffrey Scott, marketmripro@gmail.com. My Google group, which is free, is at Top Down Trader, and my website's marketmripro.com. This is for educational purposes only. Anything I talk about should be taken in the spirit of recommendation and not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisors. And I have tools in multiple platforms. I'm really excited that I'll be doing my official launch video live for Metastock at noon tomorrow, 12/3. My Google group, please consider joining. It's called Top Down Trader. I will do things that are only available to Top Down Trader members. Some of my educational programs. Sometimes I'll comment intraday about the market. I'll notify you when I place a video on YouTube or anywhere else. And why not join? I'm a nice guy, and you control whether you're in or out. You can cancel anytime. Go to Google Groups, go all groups, find the group you want, which in this case is Top Down Trader, and let me know how frequently to contact you. We have our leaders index that we put together in June, and we thought it was going to break down, but it's still holding, and it was actually up a little bit today as it's really been easing off an overbought state by doing rotation, 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 which can be painful as what you own rotates away while creating new opportunities on things rotating back in. Know your news and earnings. So tomorrow is Wednesday, so we get employment, which is big. And then we're going to have some old data on the import price index. And then we'll get the final PMI and ISM for November as well. And then Thursday, we get jobless claims. And then Friday, a very delayed PCE. On earnings, after hours, the big winners were Marvell and I believe American Eagle Outfitters. CrowdStrike was down just a bit, as was OKTA. So we'll have to see how that carries through to the morning. I like to say in the lower right-hand corner, it's a judgment call to hold stocks over earnings dates. It's really bad judgment to not know when your earnings date is occurring. Right now, futures are up a bit, and I think a bit's a fair comment. And it's nice to see Bitcoin's up again. It was, I believe, in the market today as well. I have left the link for those who have it for the Black Friday special active until end of day on Friday. So $14.95 instead of paying $19.95, including the data fees of the first year. And then there's an annual fee for data and support starting year 2 at $4.95. And you qualify for all updates that we do to the program, all new features, unless we bring in a additional educator with their own proprietary tools. And like so many other platforms, including Metastock, there'd be an additional fee. If you don't have the link, email me at marketmripro@gmail.com. We did that already. And then for any information about what I talk about in any possible way, marketmripro@gmail.com. I will answer personally. If you have an issue with the program, coding at marketmripro.com. And for those who join me on the Black Friday event, and for those who picked up the new product, at least the initial beta group, paid beta group. We'll release it to the general public sometime at the beginning of the year. Hope you're enjoying it. I will tell you that most of the product support issues we have. It all has to do with being a data vendor and bringing the data in, and we're relying on a third-party data vendor, but they're usually very quickly and easily resolved. I love doing live meetings. I love meeting people and breaking bread. I have what I call my low-cost meeting in typically in Orange County in June, and my more modest cost, I think it was 1250 this year in South Florida. And the big difference is on you get a lot more time with me in Florida and a lot more food. And it's still both of them are a good price. So more information will follow, and of course, I'll release that information into the top-down trader group. If we look at the markets today, I mean they're interesting markets. Little choppiness, but if you look at where we finished, Bitcoin was up 6.5%. This is after being down over 4% on Monday. Bitcoin has come off of its highs, but now maybe we've turned around. Um, QQQs were up 0.78, diamonds were up 0.4, Spider was up 0.19, and the dollar was down a bit at 0.04. Russell lagged on the indexes at minus zero point 0.2, coming in at the low of the day, and volatility was down just a bit as well. The new high, new lows, this was not a great breadth day, even though the markets were up. The number of highs did not increase, the number of lows remained. And so, although we're positive on the new highs minus new lows at 52 weeks, these numbers were triple digits a week ago. So, some of the breadth has come out of the market. Speaking of breadth, only 43% of the stocks in the S&P 1500 were up, 41% in the Nasdaq, and 43% in the NYSE. And you could see we did have a little bit better in sectors and industry groups. If we look at what led, as I mentioned, the the money flowed into technology, which was up on 1.03, 0.87 on the industrials, and zero point 0.3 on communications. That was it. If we look at what lagged, it was energy. After being up quite a bit, if you look at over the last 50 days, energy was actually positive, up 2.82%. From a theme perspective, uranium, semis, clean tech, Internet of Things, software, aerospace, electric vehicles, cybersecurity, feels like we're back in August and September. And I flipped this around to see what lagged. Um, as you know, my feelings on cannabis, low cost stocks are very volatile and um, they are what they are. But oil exploration, gold, MLPs were down. Some of the commodities and the ones that some of those that have nice rates like the MLPs. If we take a little bit deeper look at the markets, the timing model daily shows you what we had today. We had white candles or positive days on the spider, the Qs, and the diamonds. You know that. We are holding above the WMA and no change in either the bongo or the buy sell signal. We're still in a buy on the dailies. Even the Russell, which tried to rally, opened up here and closed low. Um, it was down a teeny bit. Even the Russell is holding above the WMA. So on the short-term timing model, despite the volatility, it still says you should be leaning long. Doesn't say you have to be all in, that's up to you, but leaning long. And the longer-term weekly model should continue to show us that we are in a buy signal from the weekly perspective. So we're having a little speed issue tonight. There you go. When it works fast. And you could see the buy signals remain on the weekly model. So cautiously optimistic that we go higher. But let's face it, we've got a Fed meeting in a week, and the Fed decision is really going to determine, I think, the rest of the year. Fed cuts sounds data dependent or even dovish. On the conference call, the markets rally. They don't cut, I don't even want to think what happens. If we look at the US indexes today, probably don't need to go very deep on them, but I'll open up the spider and we could see the spider's holding above that trend line, which is critical. Was up a bit today, 0.19. Positive seasonality still. How is volume today? I meant to look at that, so let's go into my volume tool, and people who've been around know that one of the things I like about Investors Business Daily is their market surge tool. and that their market surge tool is what I pretty much use for volume. It used to be Market Smith, and volume today was mixed, so not really increased. So on a mixed volume day, kind of consolidating sideways and above trend line resistance. If we were to look at some of the others, I think we're going to see the same thing everywhere. So let's not spend a lot of time. Qs look strong above this. Diamonds will be the same picture, and the Russell's a little different in that, as we saw in the timing model, it had a negative day today, a reversal to the downside, down 0.20, still trading above the 50 and still trading above that trend line. So that's something that I'll be watching relatively closely. Volatility was on the ETFs was down a bit, but let's see what it was like on the actual futures, down 3.77%, what you see in a decent market day. And it looks like the dollar has popped out of that little channel and gone to the downside, and so you expect further drops in the dollar. And the dollar today was down 0.04 cents. So far, I'm seeing a market that's in a moderately strong markets that want to go higher. If I had to categorize it, on the commodities front, silver has set all-time highs again today. You can see silver closing at all-time high. Gold has a little bit of a bottoming tail after a pretty big run up. Now, oil's trapped in this little pattern, and one would expect it to go one way or the other. And I'll be watching to see, do we break above or below? Natural gas gave back some today, but natural gas has been a bit on a tear, but it would be natural to see it slow down and maybe start to consolidate underneath that 200. And then on the rate side, you can see the 10-year actually reversed. It was down 0.22, and it's still trading in a range off of prior highs. When you see the 200 here, you know you're way off the highs. And the 30-year looks like it failed going into the 200, and it failed here as well. It failed back here. So do we go back and retest those lows? That's not out of the question. So rates are supportive. What else are we going to look at? We're going to look at my buckets and say no signal. I'm looking for stocks below the band, stocks above the bands. I don't see anything. We'll go on to the next thing. Market breadth. Let's take a look at the NYSE on the left, the NASDAQ on the right. I talked about, was there a megaphone forming on this? And we'll have to see. That would be very bad, because if we came down to test in this area here, that means the 200 comes in play, and that means a really big pullback. But the other comment I had made earlier is that we had a quadruple top here. So we are struggling at this top. A break above would certainly be bullish. On the NASDAQ, looks much better. Still has to break above this high. Volume, as we talked about, was nothing special. Stocks above the major moving averages are still in a relatively bullish pattern. You can see here new high, new lows were positive, have been positive now for days, which is good, but the AD line's negative, up down volume is negative, and no new signals down below. And if I look at the other market breadth tool, the thing that's most remarkable and why I actually feel better about the markets today than I did last week is look how we've come off that 96 level, and now we're much less overbought. In fact, I can see markets that still have plenty of room in them. Excuse me, as I alluded to over the weekend, rather than having an extreme correction, we may have just had some chop sideways and rotation. The JAS layout is where I do my work at identifying stocks. If we open up the top down list and look at 1-day performance and take the top three, tech, industrials, and discretionary, or they call it cyclical. If we then look at what are the top performers, we have travel, trucking, semis, specialty business, software, auto recreational, tech, distributors, consumer electronics, and computer hardware, 1, 2, 3, 4, 5, 6, 7, 8, 9, and then conglomerates. So we've got 318 stocks in the top 10 industries in the top three sectors. And lots of ways to play with them. My favorite way is to go in and pull back at an uptrend signal, make a $5 minimum and a 500,000 shares, hit OK. And now we're down to 57 stocks, rank them by number of impulses. And let's take a look at some of the ones that will come to the top. BR&T looks like an IPO, so we're going to skip that. P-Lab, Photonics, is that what it's called? Photronics. I like how it's retaken the 50. I love the seasonality. I love the volume. Volume should be a breakout, momentum and volume. Relative strength looks good. OBV looks good. It's not overdone with a high jump here. Let's see if there was earnings today. Nope, earnings were in August with a positive surprise on earnings and on revenue. So now let's look at the news. Do we have an explanation over here? What's going on? Investment by Boston Properties. Doesn't tell me anything, but I do like how it's retaken the 50. I'm impressed by the volume, and I like the relative strength in the OBV. So P-Lab looks interesting. MDB did have earnings. They beat, and you'll see what happens in this market when you surprise to the upside. Come on, MDB. You can see a big gap. Can you play that? Well, it's got the big gap up signal. That's a gap that typically goes higher. I wouldn't let it go below the low of the session. But MDB had a big run. What about Lattice Semiconductor? Similar to the P Labs breaking out above the 50 with volume, breakout momentum, good relative strength and OBV. Fox was on the list yesterday, kind of a little choppy to me. SYNA Synaptics, I think they did a big deal with NVIDIA. SAIA, it's kind of interesting sideways move, just took out the 200. Let's look at fundamentals. It's been losing money, but surprising to the upside on earnings and revenue. We're going to get $1.87 versus 284. I don't like to buy things whose revenues are dropping. Werner is trucking. I think so is SAIA. And Werner is kind of low in the pattern. So that's typically where I start. Let's look at Taiwan Semiconductor. How's this looking today? Beautiful. I don't like this topping tail. The high jump tells me we were at 100. I don't usually buy the high jump of 100. This one just looks extended. So I typically run a top-down analysis. On this analysis, I like P-Lab. I like MDB, even though it had a big move today. And I like Taiwan Semiconductor, but it too had a big move. Another thing that I might want to do is to go into my scan. So let's kill all of these. Kill these. All right, let's go back to the impulse list. And let's look at my two favorite setups. A plus is a double momentum signal, and it's been one of my go-to signals this year. And we have two, ATAT, Tour Lifestyle Limited. We might be at all-time highs. We had a nice breakout to all-time highs, or at least multi-year highs, which I like to see. Let's go back and look at it. Seasonality is okay. Great volume. Double momentum and volume today. Look at relative strength versus OBV versus moving average, rather, and OBV versus the moving average. It's at 97. So the only thing I don't like about ATAT is it's getting extended. And then SAIA made it to this list as well, just breaking above the 200. Looks interesting. I would not worry about extension on a stock sitting on the 200. Typically, when a stock goes sideways for any period of time, the moving averages bunch up together, and I throw out my high-low jump. The other scan I like is the A scan, which looks for pullbacks and breakouts. Usually requires a squeeze, and we got a handful. Brookfield, BIPC, infrastructure build. This one's interesting because a breakout, ultimately a pullback to the 50. One could take trend lines and probably, oh, you didn't like my trend line there? I did, okay. Give me another one. And say that it was in a bit of a triangle and it broke above today, which is bullish on really good volume. Let's look at earnings. Nothing in the fundamentals. Was there any news today? Dark side of high yields and cover call ETFs. So this is an infrastructure ETF that I believe participates in the data center. Now, what's required for the scan? What's required is to be in a squeeze, which is the yellow line, and then to either have a momentum dot or a breakout dot. GlaxoSmithKline, British-owned pharma company. It's interesting with a lot of these pharma deals are being made with Trump to avoid tariffs and to avoid things like the IRA or MFN, and they're doing well despite the fact they're taking price cuts. And I guess that's a story of, well, it's not as bad as we thought it could be, which I think is what's going on with some of these biotech and pharma stocks. But certainly a nice move up there. SLP, Simulations Plus. I love this side of the chart, but I don't like where it came from, so I'd have to do more research. And then Vertex Pharma, a lot of drugs for pulmonary fibrosis, which is a bad disease, and cystic fibrosis, similarly in a trend line, in a trend heading up. I think of this group, I probably like BIPC the most. And FMX, I think that's Coke in Mexico, breaking out, potentially a safe play right there. So, I think I gave you a handful of charts that I find interesting. A lot depends on the market. I do think we run higher into the end of the year, but it doesn't mean we don't have some pain and chop until we get through earnings or through both earnings and the Fed meeting. But any talk, any consideration of a cut, if we hear the rest of the world is raising, I think that'll bring volatility in. Have a great day, and we'll see you tomorrow. And come see me on the Metastock presentation at noon.